Good morning to everyone. Welcome to today's weekly update. We are familiar with the structure and the wave that we've been following. This DXY, daily time frame. And what next and what are we seeing presently on our trades? We had seen this as the first arm, and we had seen this as an extended flat, and we had seen this as the first impulse here, and we're quite familiar that we said we're not going to take this top. Then the price had gone to the downside without breaking this top and this top, and we are seeing a further break to the downside right now. Now, what are we seeing here? Usually what we can do is to take each wave piecemeal. Each wave that is developing, we have to take them piecemeal and to dissect what is likely going to happen. Now, we must know that if an impulse is developing, we have to see a 5 wave. So the first wave has to be 5 waves. But again, at times, the first wave of an impulse is 5 waves. But the first wave of a correction also could be 5 waves. And that is what at times could be confusing. We have to look at the big picture, the higher time frame, what the higher time frame is telling us, because the first 5 waves of an impulse could be the impulse in the right direction, or could be an impulse and its corrective. It's only when the correction is a flat, that is when you begin to think of, okay, the first wave is not 5 waves, but it's 3 waves. So you know right there that the first wave that you are seeing is a 3 wave, and this is not an impulse that is reversing, but probably a correction. So if it's an impulse of 5 waves, it could end up being a zigzag. So you have to begin to interrogate yourself that this impulse, of course, is 5 waves. Would it be a zigzag? And so if it's going to be a zigzag, you know what your zigzag would give you in an extension: 100, 127, more, but not more than 161.8. If it's going beyond 161.8, you begin to interrogate yourself, what am I seeing? This extension is more than 161.8. What am I seeing? So we're going to interpret all of that. And when you are on the wrong side of the trade, then how do you do? What do you do? You have to still be patient when you're on the wrong side. If you're able to catch it immediately to say, okay, I think I'm on the wrong side of the trade, then what do I do? Then if we give a position of entry, and if that position of entry is not going to work out, then what do you see? Because it's only when you don't have any other job than just sit behind the system, and what you do for life is, you trade forex or you trade digital economy, then you're able to see, because you are locked behind your system all the time. So you're able to see things as it unfolds. And most importantly, when you are getting to critical levels. But at times, when you have other things that you are doing, and of course, you are a professional, then you understand, you're not a beginner, you're not an intermediate, you are an advanced trader, but you have other things, side job that you do. When trades pull beyond your entry that you have marked out as probably an order, you have placed an order, then you quickly have to navigate and see, what are you going to do? Are you going to close in a little loss, or are you going to leave it and wait for a retest? These are things that we have to learn to do without freaking out. Okay, so let's go back here now. This is daily time frame. There's a daily time frame, and we had seen this mess created here for us to have this move and for us to have this correction. And if anybody wants to look at this correction, you can say this correction to the upside is just like a 3 waves on the daily. So the first is this to the upside, the second and the third, that gave us an ending structure here. And usually when we see an ending structure, we want to respect an ending structure that the direction that you're going to have is the opposite, and which may grow a bit longer. And so that is why we add this 5-wave structure to the downside, and it has broken this low now. So what are we anticipating? What do we think is the direction? Are we going to go up? The chance of we going out to break this top is 30%, but the chance of we just correcting this wave to a 50% or, to a wave 2 of this initial move is 70%. So we must entertain the higher probability of we trying to go up to correct this move than breaking it. So 30% to break it above and 70% to just correct as wave 2 and come down. So we are going to look at that. This is DXY, daily time frame. So what is giving us this information that we are not done to the downside is because of this arm that has been created. So we'll still see ourselves coming down to make an equal arm. But again, we know that price may still want to push a bit higher, around this area to create upper zone for B before having a deep C to the downside. Again, so we are running against this leg that was created by the extended flat. That if we have an extended flat in the middle, we don't want to see ourselves break this top for now. And so we've been having a lower high from here, here, and here right now. So the lower low that was created here, we had a lower low, then upper low, and it was going up before, and we just add a breach of that now by breaking this bottom. So let's go back there. So in the immediate, we are seeing the creation of a wave 1 and a wave 2, and inside of here is creation of a wave 3, a 4, and a 5. Now, before we can say that we are going up, if it's going to be an impulse that is reversing, I would expect that we ought to have broken this wave 4 for now. So it might be a correction of a zigzag that is growing. So this wave 4 is there to be taken at 104,500. And if you look at US dollar index, is the same. We are here to take wave 4. Okay, wave 4 at this point, it's the primary wave 4 is yet to be taken here. The primary wave 4 at this point is yet to be taken, and we had a 5. So this is wave 5 to the downside. This has been completed as a 1 and a 2, a 3, a 1 and a 2, then inside of a 3, and the 3 was completed here, a 4 and a 5. So we are about taking up the upper limit of wave 4 here, and to break upwards. Now, what we need is that we need price maybe to crawl slowly to the upside, then correct to the downside, and give us at least one more leg that is no more than 161.8. That is what we are looking for. So if you're on the wrong side, you need to plan to get out after the correction to the downside, because this is impulsive to the upside, and we are going to correct at least to the downside for one more push or one more leg to the upside that is not more than 161.8 for us to come back to the downside and continue with a bigger wave. So, and if it's more of what we expect, then we will know. Now let's go back to DXY. So the DXY on the 4-hour time frame, again, when you are trading at times and you think you're on the right side, or you think you are correcting and you're not sure if it's going to grow into a bigger correction, there are things that I will show us later to do. And that thing is, number one, the power of 4-hour resistance or support. The 4-hour time frame resistance or support, you must know that. And you also have to look at where is my fourth wave? Where is my fourth wave? And your fourth wave has to be broken before you can say you are ready now to take your trade to the other side. The power of 4-hour resistance or support, then your fourth wave must be identified. Now, in this case, we have identified that this is our fourth wave. So this fourth wave has to be taken to the upside before we know that now we have changed the gear. So if this fourth wave is taken to the upside now, then we can say that then after taking the fourth wave, the price will react either before it or above it to the opposite side, and then correct to move up again. So, and because we are thinking it's going to be a correction, then we are looking for a three wave of correction. Now, back here, like I said, we are seeing this move to the downside here as the first move of a 1, a 2 to 3, 5 here. This is like a 1 with 1, 1, 2, 3 of wave 2 here. Then we began to drag to the downside to have a proper wave 3 around this area. Then we created an ABC of a wave 4, then a wave 5 that was ended here. So, you know, at times when this thing is forming, it could be quite challenging counting the internal structure of what is developing, not until you see like the trend. In this case, trend's resistance is broken and is taken to the upside, that you know that, okay, the momentum actually is lost, because the momentum is going to drag until it's lost. So let me bring out the drawing. So bringing out the drawing, so we can see that the momentum created by wave 3, because it's not from wave 1 now. So because if you connect wave 1 and it's going to be steepy or more, it's going to angulate more to the upside. So this at least clearly shown that we have broken wave 3. The whole of wave 3 is gone. If at least this one has clearly shown the all of wave 3 is gone by taking this to the upside now. So looking at the inside of this 1, 2, like I said, 3, 4, and we're taking this to the upside. So we are looking at this also because it's impulsive to the upside. But this impulse is yet to break wave 4. When you want to, actually, correct dip at times, you expect it to break wave 4. So I don't want to go into that anymore, because we had a wave 4 broken here. When we come to the downside, the price traveled down with wave 1 to break wave 4, and wave 1 has to break wave 4 for us to know that, yes, this is, we are going, changing trend, okay? So, but in this case, wave 1 is yet to break wave 4. It may not break it, it may break it, it may kiss it, and for it to complete itself. So we are seeing also that this is going into a 1, a 2 here, around this area, a 1 and a 2 here, probably a 3, and we are seeing a 4, probably a 4 around this area. So this formation here looks like a formation of a wave 4 for us to have a 5, which may pierce or, just react below it, and we are going to see a correction to the downside. So I don't expect that this move is just going to turn down from here and probably begin to go to break down. This thing is not going to break down next week to break the low. I don't see that in the immediate. Now let's look into this and dissect it further. Let's dissect this further by going into 1 hour time frame here. Now, going into 1 hour time frame here, like I said, we can see A, B, C, and a 1 and a 2. So this is the end of a wave 1 here, 1 and a 2 here. Then we are seeing the internal structure of wave 2. And this, to me, it's like a wave 4 building up here, a wave 4 building up here. So if we get A by creating this, when we are correcting deep, once we're ready to correct deep, a wave B would break this to the downside to give us another support. So, but in the inside of a wave 3 itself here, because this is A, B, C, so wave 3 started from here, and we need to connect with 3. So anything you want to connect here, you can see it broken, and you see it broken already. I can see all this ticking. I think if we go inside of a 4-hour time frame, we might be able to draw a more reasonable trend support for that wave. So let's use this bullish candle here. The best thing to do most of the time is to begin to use your fib tools to calculate 1, 2, and this is of course 3. This may be a wave 4 in the making, and we turn to our time frame, upper time frame, 4-hour time frame, to see if it's going to be a wave 4. So now we are seeing there's a 1 and a 2 here. Then a wave 4, most likely, we have to look at the immediate resistance here or support here. We have to look at it. So this is immediate support here that if we take it to the downside, we are correcting. I can't do more than this to show us. So if we take this to the downside, we are correcting. So we are still within wave 4. And when you are buying in this case, this is where to hide your stop loss. But for me, we are almost ending this structure. We are almost ending it. This is the inside of a wave 3, 4, and a 5. Probably will go up one more time to correct, and before we come to the downside. That is what I can see. The same thing is what you're going to see on US dollar index, and I'll quickly switch to yeah. So this may just take the top here. It might take the top on US dollar index, but it might not on DXY. So it's the same thing that we are seeing here. A 3, the lower limit of a 3 actually went a bit down here. So a 3, a 4, a 5. So this is the primary 4 here. This is the major 4. The major 4 didn't even get to the end of the primary 4 created by wave 3 here. So we have to know the primary 3 and the major, the primary 4 and the major 4. We have to always identify that. So if we go to DXY also, we can identify those ones already. The primary 3, the primary 4 and the major 4. Now, in this case, to the downside, so I put this, at the edge of the primary 4. The primary 4 is here, so we are seeing the ray 4 being created. Let's see. Okay. So after the correction here, so we went up to do a 1, ABC of a 2 here. So we are seeing a 3, a 4, probably a 5. So this is the last wave 5 of this structure. So this is last wave 5 of this structure. So we'll see it how it builds up. Then let's turn to DXY. I'm sorry, Euro dollar, and see where what we have under Euro dollar. Now, under Euro dollar, there is one thing I want to teach also as well here, because it's the same. Okay, let's quickly go to the daily time frame. The daily time frame. Just like we saw with the DXY, we had broken this. We are yet to take this. This top has been broken, and it seems as if we are creating an upper high now. after this, a lower low here. So we expect that we're not going to come and take this low. If you should come and kiss this low, then it's telling you the momentum has shifted to the downside. When you are correcting a particular wave, you should not correct beyond 76 of that wave. Once you correct beyond 76 of that wave, then the other side of the trend is kicking in again to break to the other side. So now this one coming down, if we are going to go further up, we should not go beyond 76. And most times it's 61.8. Now we are looking for a primary 2 here. The primary 2 is here, right at this level, so which we should not take to the downside if we intend going up. So we are going to have a deep correction. This is what is telling us is going to be a deep correction. So I know we're going to have a deep correction. So initially the price will start by fooling us, and we don't want to quickly enter. You cannot, most of the time, if you want to save your money, you cannot, quickly enter with them. You count, and they can change your count around this area when you're thinking it's 5 or is not completed. Around this area, see what the price did. The price did some funny things here, a little correction as if they're going to push, much higher, but they just did a 4 here of the inside of this wave. They want to, a 3, a 4, a 5, and they change it without giving you a clear ending structure, and the price began to come down. So of course, it could be a leading diagonal. So a leading diagonal can be like this. So that is what we see. This is 4-hour time frame. So now I want to tell a bit of the story of what happened here. If we go inside of a 1-hour time frame, I want to tell a bit of the story, because the 4-hour price action didn't give us anything here. You can see the 4-hour price action didn't tell us that we are coming to the downside. Even the daily candle didn't quickly show us that we were coming to the downside. So sorry for that break in transmission. So the price action here, even on the daily and the 4-hour, didn't quickly tell us, but we were seeing this breaking. And I remember I had to tell us on the up that you must look for your 4-hour price, 4-hour resistance. And if price should break beyond 4-hour resistance, then we are going to go up. So price never did that. And I gave us also the area below, which is the support, that once price take that support, then be anticipating that price is going to break to the downside. And that was what happened. And now, when you finish a structure, you must know that, okay, a structure has been created, which is ABC of a low here, which was created. Probably the 4th wave here was created. The primary 4 was here. This is the secondary 4, which is the 4th major. The primary 4 of that wave of euro dollar, and this is the 4th, the secondary 4. And we began to go up to do a 1 and a 2 and a 3, a 4, and a 5 here. So usually when you are correcting a bundle of a broccoli of 5, you want to see that, okay, maybe you are correcting that broccoli of 5 into its second wave. So into a second wave, the first thing is to look at this as we are correcting the whole of this from this point to this point. So, and we look at a 50 or a 61.8. So once you begin to go down, then you must not take a 76. Once we take a 76 of this particular way to the downside, it tells you what is saying, you are saying is a bigger correction. So we now know that this is going to be a bigger correction because we are taking more than 61.76 of this immediate way to the downside. It's going to go into a bigger correction. Though we have not broken the end of this wave. We can go up. Going up is just a correction to the upside. You must know that price is coming down again after that. So if you are being in a wrong here, so you look for this to correct, take out probably your buy order and connect to your sell to sell the second arm to the downside, and there begin to look for a buy. That is how to do it. Now, Again, at this level, you add a 1, you add a 2 or a B, and we are going to have a C. Once you begin to see, because we can give an entry thinking that we are correcting a 1, 2 to the downside. If this is a 1 and we are doing a 2 to the downside, we can give an entry at 100 extension or at 61.8 extension. But what guides us at times is where is the 50, where is the 61.8 of the retracement. But again, you have to follow the history of the wave that is building to the downside and see where would my 100 be in terms of that 50 retracement to the downside or 61.8 retracement to the downside. Where would my 100 extension of this wave be, or 61.8 of it, or 161.8 of it be? If you are now coming to the downside, you must always be looking for your fourth wave, because the fourth wave will suggest that you are nearing the end of your correction to the downside. So, and in this situation, let me bring out the drawing. I've done so many things here. Let me bring out the drawing. So in here, we had seen an A B, and for us to know where the 100 or 161.8 is going to be, when you start from here, is a bit of practical now that I'm doing. We're looking at the purple now. So a 61.8 was here, and 100 also was here. 100 here, a 61.8 was here. So here, for your 100, this is 1 hour time frame. At this point in time of your 100 here, I didn't see a fourth wave breaking above it. So it will be a wrong entry with this sharp wave breaking your 100. Even if it broke your 100 and you are saying that this is a possible fourth wave to the upside below 100, so you are thinking that your entry should be at 61.8, which is around this area here. Fourth wave didn't form before your 100 extension, so your entry will be wrong here because fourth wave didn't form before it. If it's going to end there, the fourth wave would have formed before it and ended there. So a sharp wave broke it to the downside. So your next target is 61.8. That probably price is going to stall here. So now at this point also at 61.8, when we add this correction, we could have thought that this is a fourth wave that is correcting. And so if it's a fourth wave that is correcting, then the correction to the downside must not go beyond 161.8. What do I mean? This is what I meant. From the point of yellow correction here, this is practical session, please, to the point that this thing got to here at the other yellow there. Let's take it. So this thing should not break 161.8. So this had broken 161.8 here. That tells you that this thing is not going to stall at 61.8. Let me bring it there. So let me bring that yellow thing there for you to see. It's going to be a bit messy, but I think it's better I show you this. So that is the low of that wave 61.8. So let me now take this out. So this is a particular demonstration. So we know that it has gone below 61.8 here. When this one came down, it went beyond 61.8. 61.8 is here. So it went beyond 61.8. It went beyond 61.8 extension, extension of this fourth wave to the fifth wave, if you think this is the fifth wave. And so with this, everything breaking a 161.8 of the whole move to the downside tells you this is going to grow into a bigger correction. Because if this is an ABC, it shouldn't pass here. This one was happening before it could get truncated and ended around this area. But what we saw was that it went through it, even it went past extension of this seemingly fourth wave, breaking 6.1.8 of that extension to the downside. So all you can do is to look for your way out here. Price will not just break it for a reason. So way out here is to exit immediately at this level of 1.09017. Now, I think I gave us entry also around 61.8, I think so, of the old extension, thinking that we are correcting this old wave here. I must have given an entry around this area, yes, around this area of 61.8. So in other way around, it's just not the entry, because following the history of what was building, then you will know that it's not an entry. The fourth wave before your entry is very important. So if you're not getting a fourth wave before your entry, you may just delete your order, look for your fourth wave, and let that wave end it and see where it's going to extend to. So now, what lesson do we have here? So because this had gone to break 161.8, do you now think that this that is coming to the downside is now a motive wave that is going to develop into a reversal? No, it's not a reversal. It's just telling us that it's a bigger correction. It's telling us that it's a bigger correction. So where this that is developing, you might think this is an A, B, C, but it has turned out not to be an ABC of that small correction that is accommodated between here and here. That is what it's telling us. So it has grown into a 1, 2, 3, 4, 5. Now to now make this whole move an A on the larger time frame. And now we're going to have a B on the larger time frame and a C on the much larger time frame. That is what is building. So now, even between here and here now, we are seeing that in terms of correction, 88 had been breached here. So that tells you 76 has been taken here. So this is not a correction of this immediate wave, but a correction of the whole wave. So it's better for you to see it early that what is brewing here is a correction of this whole wave. Whole wave from here down here as a 1, 2, 3, 4, 5 here in the blue here that we are correcting, and we are going to break this. We are going to take this. We are still within this trend support, a bigger trend support, but we're going to take it. So what are we seeing immediately? We are seeing that even in the immediate correction that we are seeing, which if you catch it, fine. If you don't catch it, fine. So we are seeing a fourth wave here. So if we are seeing a fourth wave here, then we are saying that we are going to have the fifth wave to the downside, which is what currently we are seeing now. So if we are able to catch the end of this fifth wave, we want to see it not break from the third wave here up here. It shouldn't take 161.8, which is around this area. So what euro-dollar is giving us is a scenario that we might not even take the primary 4 here. The primary 4 of 3, 4, and a. So, okay, 3, 4. Yeah, 3, 4. Then we now add the first move of the, okay, this is the fifth wave. Yes. Yeah, this is the fifth wave here. So I can say that, you know, wave 3 ended here. Yes, wave 3 ended here. So wave 3 ended here. So we now see that this is an A, B, C of a wave 4. You can say the big 4 probably is around this area, but we can still push it below the primary 4 here. So 4 here, and we now add a new move. We now add a new move to the upside. So of it's not this. If you say this is 1 and a 2, it should have gone higher than this. So it has probably brought your 1 to this area now. So this is just A, B, C of a 4, 1, a 1, 1 around this area. And I'll push this 2 here, then with 3, with 4, with 5. So that is how to correct this. The wave 3 is here, wave 4 is here, then wave 5. And so we are seeing a new move. You can see how we correct this thing. So you have to quickly align yourself. So for now, it might not take this, it might just come close to it. If you can see this correction, break this low again and come around this area, you can follow the internal structure of this to pick a buy. So when you pick a buy, you are targeting at least 50 or 61.8 to the upside, and before you join another trade to the downside to look for equal leg. So looking for equal leg, where are we going? So once we are done here to the upside, ultimately we are looking at the potential price coming to a 50 of this move from here to up a 50, a 61.8 or a 76. So 76 is around this area. So between here and here is where we are expecting at this price to engage. The strength of the wave here, because it's developing into a zigzag, it might just go shallow at 50 to trust more to the downside. So we are going to be looking for a 61.8, 100 or 61.8 building to the downside to capture our move to buy again. And if it's going to grow beyond a 61.8, essentially the downside, just know the same thing that happened on the lower time frame is telling you that if it grow beyond 61.8 of your ABC, then it's telling you that price is coming down to take the bottom again. So these are the ways we quickly know what is brewing. So let's go to gold. I've talked too much here. So on gold too, we know that euro dollar is almost ending. So on gold too, we are yet to see fourth wave here. The 4-hour time frame is around this area now. So we need to take this to the upside to indicate that we want to go up. So this at the doji here is the 4th hour of a thing. Now, when this was also forming, you know, this was like the 5th and the 4th and the 5th wave here. So, and we saw a first move breaking the 4th wave here. And so this is an impulse here, and we felt like we must have a correction that should not break this. I gave us a level on the 4-hour time frame that if we are to come down the more, we shouldn't take a particular level. But I looked at that level, I think, on the daily time frame. Let me see. Yeah, on the daily time frame, I felt we shouldn't take around this area. We shouldn't take the close here, which was around 2468. Or better still, if we do that, we should not take, this is the daily close, which is 2468. Then I went to 4-hour time frame. 4-hour time frame. And I looked at 4-hour time frame here, which is, I said we shouldn't take 2475 or 76. Yeah, that was what I gave. I gave 2476 because the daily gave us 2468. And so at 2468 here, the price would have taken you out of the equation at 2470. So the 4-hour time frame did the magic for us. And if you had been wanting to now begin to sell that, and we sold, I sold this anyway, but I exited maybe around this area. So one could have probably followed it. So what you do, it's the 4-hour resistance being created. Once price begin to move beyond a 61 or an 100 extension, you look for immediate. For in this case now, if I go to 1-hour time frame, okay, let's go to, let me bring out the drawing in case we want to manage this trade. So this is where 100 is, and this is where 161.8 is here. So if this is where I'm yet to get to 100, I'm yet to get 100 immediately for our time, 4-hour candle close, you can bring your stop loss immediately on top of this 4-hour closure of a candle. You know, that's what to do at times when you are trying to trade against your trend, so that because you know it can quickly change. So when you bring your stop loss here, you have gathered some profits, and you are thinking that if this thing should bounce back at 100, it's going to go up. But I know it might not bounce back at 100 because we are within this immediate correct move to the upside to finish this to the upside. We are yet to even do a 50. So I was like, okay, we might just get to a 50. So that's how to do it. Then, just like I explained on euro dollar, you are looking at your 61.8. Do we have a fourth wave? So a fourth wave didn't build up here. So always sitting behind, once you break structure to the downside, sit behind your fourth wave stop loss, which is around this area in this case. So once we broke this 100, allow the 4-hour candle to close before you fix your stop loss around this area. So you will always win. Now, just like we did with, it's important I explain this for future trades. Now, this looks as if this is the 100th extension. This thing broke it. You may think it has broken your 100. Because it broke your 100 through and it didn't form before your 100, tells you that price is not going to end at 100 extension. It broke it, and it didn't even get to 50 retracement. That's how to interpret quickly. So you saw an engulfing candle break through your 100 extension of this A and B. It broke it, so which means that whatever you will see immediately after you had that 100 is just a pullback and not a fourth wave. So a fourth wave must also be created, must always be created before your designation. So now our designation of 161.8 is here. So this happened here, probably before at exactly 61.8 extension to the downside or retracement to the downside, which is here. This is 76. So we saw this, we thought it could be a fourth wave that is being created on the 1-hour time frame. So, and price did that. Of course, it could have been truncated because it may still take this as, you know, the retracement at much bigger, having much bigger influence than whatever is happening inside of here. So then we saw this. Immediately it broke through your 61.8 and it broke through your 161.8. That immediately after that 4-hour closure, you should know that price is going to go much bigger. You know, your mentee or your mentor might not be probably looking out for you all the time. So this happened, you should have gotten out here immediately. You saw a breakthrough, it was gotten out here. So like I said, and like I did explain with euro dollar, this is going to be a bigger correction because it has broken 76.8 and it's about breaking this area. So what we are seeing now is that we are most likely seeing a wave 4 being stylishly created until we break out of the trend. Let's go to where I had a proper drawing. So this is where I had a proper drawing. So I'd explain the inside of, this is your wave 100, price broke through it. A fourth wave didn't form before it. And likewise here, you know, it broke through your 50 and, you know, 61.8, gave you a pullback. And now, so we are seeing this. This will be a major support. This will be a major support. And so we are seeing probably fourth wave being created. So we're going to see what is going to happen here. Price may come here, kiss this area and bounce to the upside. But I think we are getting to the end of this wave. So it's going to be not A, B, C again. This is 1, 2, 3, 4, 5. And it's going to be A here, and we're going to see a B and go more down. So what this one is telling us is, it's this. We are seeing the end of the first move to the upside. We are seeing the end of the first move to the upside here as a possible wave 1 of 5. If this is not going to end 5, if this is not going to end 5, we are seeing a possible move of 1. Are we seeing a possible move of a wave B to a C? Now, it will stop being a C once we go beyond a 161.8. We need to always look at the higher time frame here to tell us where pains are going to. The higher time frame will always tell us. So we are seeing what is developing here. So we might have a B and drag down to do a C. But again, this, for me, I still think that we still looking to go more to the upside, because this is like a 1 on the entire time frame, a 2, and this may be, if this is going to be a 3 here, and we are seeing a 4th wave, then we need to see that this should not pull beyond 40. That's another way of looking at it. So let's look at that scenario, that if it's going to be a 4th wave, a scenario if it's going to be a 4th wave. If it's going to be a 4th wave, let's look at that scenario here. Right from this point of a 2 here, for me, this is like, let's say this is a 2. This is beyond a 4th wave. It's beyond a possible 4th wave. 4th wave should have ended here, so it's beyond a possible 4th wave. So we are saying that this may be a B and a C, correcting the old move. This might be a 1, this might be a 2. That is a possibility. And again, it might be a reversal. This might be a reversal. This may just be a 4th wave, and the whole of this may have ended as a 5th wave. So we are looking at 2 possibilities now. But either of the possibility, the price will still correct. That is what we are saying on gold. Either of the possibility, the price will still correct. So we are seeing these as a possible 1, 2 for further upside, looking at the higher time frame. Again, we are looking at it as a possibility of this wave turning to a reversal, and probably the first wave, the second wave. And so if we have a correction, so if we have been selling or buying, let me say, if you have been buying, yes, if we have a correction, know that that correction could be a B or wave 2. So we're going to attend to it like that. So we should soon have a correction to the upside. Before we break this low, or we might just take this low without taking this low, and we'll have a correction to the upside. So with that correction to the upside, you can take a buy from the low to relinquish position up at 50, retracement of the entire run to the upside. We'll look at all what is giving us to get out of a buy, then to pick a sell. Now you must be looking for a sell at the correction. So the buy is not what I want to do now with this wave, magnitude of wave. I want to look for a buy to the upside for now. And then you look for a buy to the upside, a short buy to exit at a 61.8 or at 50, depending on the way it's going to. I will look at the dynamics and give us an exit entry, and to look for a further sell to the downside. Of course, we're going to take that sell to the downside with price action. And so once we are taking the sell to the downside, we're going to be taking the sell to the downside as if we are selling a wave C. Then again, we'll be hiding behind for our resistance as a stop loss, because it might end up growing to be a wave 1 of a bigger correction of A, B, C, because it might just grow into, and because it's not going to be a reversal really. It can only be a bigger correction. So we are seeing is we thought it was a smaller correction, then it now looking like a correction of this one, and it can be a bigger correction of the old move to the downside. So the 4th hour resistance stop loss is what will guide our sell, so that we are not shortchanged, and we're going to follow it. Once that arm breaks beyond what is allowed in terms of a retracement of a 61.876, then you know that is going to turn to a bigger correction to the downside. So we must not take the primary two here. Anything we do, this primary two, we must not break 23.18 if we are going up again, as the third wave is this a 1 of 5 and a 2 of 5. We must not take this low. But once we begin to take this low and the arm that is coming down is extending more beyond 161.8, if this is 1.8 is still within the ambience of this, then yeah, fine. But if not, it's 100. So once we go beyond 76 retracement of the old wave to the upside down, then the recovery tells you breach it. The recovery tells you are coming to take the low and you are having a bigger ABC. I think we understand that. So the last one I'm going to go into now is NZD USD. NZD USD. I'm just going to go into the daily time frame for us to see what NZD USD is giving us, daily time frame, and where. So this is the daily time frame. Nothing is going to change my view about NZD USD. So this is the first move to the upside. The A leg and the B leg, we still want to see more upside. So we had an entry here and it went up. It never broke up. It came back down. So, and like I said, looking at this arm that we might have head and shoulder pattern. So we thought we are going to probably have a reaction here. So we had that reaction perfectly here, but again, when I saw that the price was just moving in a corrective manner, I said we might take the bottom and go to 61.8. So this is the next area we are coming to. We may be seeing a reaction here, and that's the entry I gave. We may be seeing a reaction here. If it's going to be a big trust to the upside, then we'll know it will end there. Otherwise, it will still come down the more to test 76 area before it bounces to the upside. So this is the next area we might see reaction. If it's going to be completed, we need to see a big impulse to the upside to tell us that we have ended there. So we'll begin to look at all those levels. But the thing is that we must not take this primary two, talk less of breaking here. So price is not coming to break this 58, 500 now. Price is not going to. So it's not a guesswork. So we are seeing this as a complete bundle of a 5 to the upside. We are now seeing this as a move of a B, and a C. So with that said, where are we going to end? Here, we're likely going to end. So let's quickly draw it for you to understand where we're going to end here. So please don't panic. Price is going to turn up when they are ready to turn up. So they might turn up at 50. They might not refuse. You might see reactions at those levels. So, but it doesn't really matter. So this is where we are at the end of A wave and the end of a B wave. So this is where I'm going to end. I'm not going to touch pound US JPY for now. I might be giving us, when it's ready, I will tell you. So we look at from the beginning of A wave to A wave and back to a B wave here. So we look at this as 100 extension. So the 100 extension is around this area. So the 100 extension, which price may react, is around the level of our entry. So we must know that that may happen. So we should be looking for a fourth wave before seeing a fifth wave here. We should be looking for a fourth wave. If you're going to end here, we should see a fourth wave of this move developing around this area for us to have a fourth wave and finish the fifth wave here. Otherwise, we are going to go more down to around this area. This is 61.8, then or 127. Now, one thing we have to know is that this is 1.8. Would it be tenable? This 1.8 would it be tenable? Let me just use red for it right for now, or let me use this for it now for now. So what can this work? If it can work, we will know. For now, this is the top here. Let me change this to blue. Then the low for now, blue area is here. So we want to know in terms of retracement of that wave, if that 1.8 is tenable or not. I don't think it's tenable. So let's look for where retracement of 76 can be here. In terms of blue, so this is just a rough. So you can see that 76, 78 can be around 127. So this can be a good area. This can be a good area of entry. This can be a good area of entry. 161.8 of zigzag cannot work in this case. This is 85. So that will not work. 85 will be a red area that price cannot go beyond. So that cannot work. So a 61.8 here is still possible for 100 as a truncation around this area. So we could have a truncation around this area. So we could have a truncation around this area is possible. So for a blue, so we could have a truncation that store price around this area. We are looking at this area. So we could have a truncation around this area. So if we break through this area, we'll see, of course, it can still work perfectly around this. Anything around this area can still work. But once we pull beyond this area of 100, this is where we are coming to. A 76, a 78, that's where we are coming to. So you must know that. You must know that. In terms of a correction of these as a possible zigzag to the downside. Why are we saying it's a possible zigzag? Because of the correction of a B. Forget the nature of this wave itself. The correction of a B is at 61.8. So the retracement of A to B is 61.8. So we can have an 100. 100, it's a big thing. So this area, it's a big area. So if you want to put your stop loss should be around 59, maybe 700. 59, 700 area on this bigger time frame. It's good for your stop loss in case, 700 is good for your stop loss in case you want to take a bite around this area. Price may just react here and begin to go up. So now going down to look at the 4-hour time frame structure to see, are we developing a fourth wave yet? I'm going to end soon. So this now is seen as a possible 1, 2. So this is a 1, A, B, C of a 2 is the second wave. So we are seeing a 3, 1, a 3, 2. For me, the way this is developing, this may break this area. So I'm seeing the possibility of price breaking a 61.8 and going to 76. That's what I can see here. I can see that this thing is going to break. I'm not seeing a fourth wave around this area now. I'm not. This is not the fourth wave that I want to see. This is like where 1, 2, but this is still inside of a wave 3. And this can extend, break this level here. So I see we may have a strong reaction around this area. You know, when we see a reaction around this area, I think it will be in your best interest to. The fourth wave is not appearing. So the fourth wave is not appearing. So I don't see that until the fourth wave is given. So we cannot take. So once we break through and we don't see a fourth wave, just put your stop loss or take profit around your entry area here for price to knock you out and come to this area to pick your order. So this possibly could still go down more to the downside by, let's say, 12 pips to 75 pips. That's what I can see. So when it's ready, we'll all see it and we'll wait for it. All right. Bye-bye.